Well, I think the most difficult aspect is to totally understand decision-making by managements. The managements, what we have found is that you like to look at their history and what decision-making process they go through. They really have about 5 options. One is put the money back in the business, R&D, marketing, cost reduction, distribution. And if you have a big market share, marginal unit growth can provide enormous rates of return on incremental unit growth. So that's very important. But the companies, after their infancy, start to generate excess cash, and so they have to examine 4 other options. One is the dangerous one, which is acquisitions, because too often the ego overrides the economics, and this is where it gets scary. The third one, I mean, is share repurchase. At least you know what you're buying. But again, in both cases, it's do they have discipline and price. The next one is letting the shareholders have it back through a dividend, and the last one is just sitting on it. And how they behave, we have found, is much more important to know than what they say they're going to do, because sometimes there's a gap between what they say they're going to do and what they actually do. But one needs to take that into account. As an example, years ago, or a few years ago, we had a much smaller investment in Hewlett-Packard than we would have had, just because we were very nervous about their capital allocation process. And they actually exceeded our worst expectations with the autonomy acquisition, where they, in our opinion, grossly overpaid for it. So those are the kind of things that kind of become surprises in a negative sense. They can also be a surprise in a positive sense. In the case of News Corp a few years ago, when they wanted to buy the rest of B-Sky B, we were a little nervous because we were worried about them overpaying. And then, of course, the British Parliament got unhappy with them and prevented them from doing that. And so they had to go to Plan B, which we liked better than Plan A, which was buying back their stock, which we thought was a much better use of cash based on the price of the stock. And so they moved to that, moving to that way, and it ended up being a dramatic plus from what our expectations were.